The big number to watch is $30. I think everyone knows that who's been watching the silver price for any length of time. Once we get above 30, I think we do get to $50 fairly quick, probably within a quarter or two. If you look at the gold to silver ratio, something I track very closely, going back to March of 2020, that ratio had reached an extreme that's never been seen before, about 130 to 1. And then very quickly, that ratio compressed down to about 65 to 1 in August of last year. So that ratio had moved really far, really fast. So I think what we're seeing here is just kind of a little bit of a backing and filling in that ratio, where we said last I checked somewhere around 75 to 1 or so. But I do think that silver will continue to move in the same direction as gold and outperform gold as the bull market resumes. Roughly, it's roughly a 9 to 1 ratio, where silver is pulled out of the ground roughly 9 times in greater abundance than gold. So that's one ratio you could look at. You could look at a long-term historical ratio, and that's roughly 15 to 1. And 15 to 1 is interesting to me because that's typically where bull markets peak. So back in 1980, at the peak of that bull run, the price of gold was roughly 15 times that of silver. So I think in the fullness of time, in the next few years, we're very likely to see that ratio revisited 15 to 1. Of course, that's going to take some time because we're sitting at roughly 75 to 1 now. But that would mean that silver outperforms gold by roughly a factor of 5 over the next few years. And I think that's a very logical path forward. Well, I don't think gold is going to collapse. I think we've already seen most of the selling here. I'm not necessarily calling a bottom, but I think we're much closer to a bottom than a top in the metals. And like I said, I think silver is going to outperform going forward, but I also think gold will do very well.
Okay, and let's talk about the industrial component of silver. So let's circle back to the fundamentals now. What do you think are the core drivers right now?
Well, for the silver price, you mentioned industrial demand. That's a tailwind. Industrial uses for silver are only increasing, especially with electrical vehicles, solar panels, you name it. There's a lot of things, industrial uses for silver. But that's not my primary investment thesis, and that's the primary investment thesis is based on retail investment demand. If just a small number of general investors say, hey, I want to have exposure to just some silver, there's just not simply enough at today's prices. And historically, that's what drives, the kind of prices silver investors are looking for, north of $50. And I think that is coming. We're just waiting for a catalyst. The last several thousand years are filled with failed attempts to replace silver and gold as money, and nothing has been able to replace it yet. Now, could blockchain take some of the monetary use away from silver? That remains to be seen. But as far as the blockchain uses for gold, there's also plenty of blockchain applications coming to silver as well. So I think I'm not sure I'm willing to buy into that argument yet, though. I think it's a point worth considering. Let's see. I'm trying to think of the most recent example. Like I said, I don't blame every downtick on manipulation.
I understand.
And I didn't intend to open up a can of worms, but if you go back, let's see, a few weeks ago, there was a really sharp sell-off in gold, something like $80, $90. I can't remember the exact date. And that happened at a very illiquid trading time. In the middle of the night before the New York traders are active. If you're a trader looking to get rid of your long positions, that's not how you would get rid of those. You would want to sell gradually into strength or into more liquid markets. That's just one example of how banks can potentially manipulate the paper price lower. Almost everything is going up except for silver and the things that should be going up in this environment. So it's extremely frustrating, and I sympathize with that. But I'm a contrarian investor, and as a contrarian investor, I like this price action because it gives us time to accumulate. It gives our members a time to accumulate at much more favorable prices. And if history is any guide, this is not going to last. Silver and gold have a long track record of thriving and prospering in this exact environment that we're seeing right now. Sure, there are still some short-term headwinds as the Fed continues to talk about taper, normalization of interest rates in 2022. Those are short-term headwinds, but from a longer, bigger term or macro perspective, we know that's not sustainable. Silver and gold always do a full accounting for the expansion of debt-based fiat currency, and I don't think this time will be any different, because a lot of people maybe learn about the silver space for the first time, and their eyes are open. They realize that stock market's a bubble, or they come to these conclusions, and then they sell everything and pile all in. And I don't think that's a wise move. I think everyone needs to have a plan. And first of all, I think people should decide, hey, I'm new to this space. How much of my portfolio do I want to even allocate to this sector? That's the first question. And then from there, have a plan to accumulate. There's no right or wrong answer, but you could dollar cost average. You could simply wait for a technical reversal. There's nothing wrong with that. Or you could scale in on weakness. But having a plan is the most important thing. But I certainly wouldn't just, hey, I'm new to the sector, put all my money in right now. I don't think that's the wisest way to do it. So I'm a big advocate for owning physical metal stored outside of the banking system first. I like to say, build your moat before your castle. I think of physical metals as my defense, and then the mining stocks as my offense. And there's different ways to invest in the mining sector. Some are a little bit more high risk, high reward, if you know what you're doing or you have some guidance. But a simple way to do is just to buy the ETF. That's for someone who doesn't want to do any due diligence on individual stocks. There's some okay ETFs out there, but a well-selected basket of individual mining stocks would outperform, in my opinion. So the person who says that this doesn't look appealing to me, as a contrarian, this does look appealing to me. You just made a really good point. Silver still hasn't even surpassed its 1980 high, and I think that's the only commodity on planet Earth that you can say that about. Silver reached about $50 in 1980, and here we are at 21. So not only are we not above that 1980 high, we're less than half. So, I mean, unless this is some kind of anomaly where this time is different, silver's got much more upside and very little downside compared to any other asset than I can think of. Picking catalysts is tough because there's a million potential catalysts out there, and trying to nail it down to one. But here's one scenario that I think is likely. I try and avoid terms like using words like crash and collapse and things like that. But let's just say the stock market, I think, is due for a 20% pullback. A lot of people might call that a crash. I think if we saw a 20% pullback in the stock market, especially if it happened in a short period of time, that's going to get rid of any taper talk. They're going to stop talking about tightening interest rates over in 2022, and they would probably reverse course and have more monetary stimulus. Just a 20% pullback in stock market. That could be a significant catalyst for the metals. So that's one potential scenario I'm looking at here over the intermediate term. Okay, so realistic forecast for this year, I'm going to say $400. I'm just kidding. No, well, I like to say I deal in probabilities, not predictions. So I think we're very close to a bottom here. There still is some downside risk to potentially $18 or $19 silver. I'm not saying that's a probability, but it's a high enough probability that we should be mentally prepared for it. The big number to watch is $30. I think everyone knows that who's been watching the silver price for any length of time. Once we get above 30, I think we do get to $50 fairly quick, probably within a quarter or two, because there's not much resistance between $30 and $50 silver. So I'll say once we get through 30, I think 50 comes pretty quick. Probably not in 2021, but perhaps in the first half of 2022. Yeah, I think downside risk is minimal relative to upside potential for anyone with a 1 to 3 year time horizon. Downside risk is minimal. If you've got a 1 to 3 year time horizon, I think we're squarely in the accumulation zone. Nailing the exact bottom is very difficult. I mean, very few, and nobody can do that consistently. But we can say, hey, we're getting close here. All the fundamentals, the technicals are all starting to line up that we're getting close to a bottom here. And I think this is a great time to start scaling in if you've got that risk tolerance and time horizon.